All right, so in this section, we are going over trade management, and so this is the video for that section. And so I wanted to start with this screen because I thought it did a really good job of showing two things, right? It doesn't show the larger overall trend, but it shows the immediate trend, and then it also shows the momentum within the trend, right? So we can see that price is moving up here, right? So we can see that there is an upward trend, right? Which is actually a counter trend to the larger trend, but this is the trend at hand that we have to deal with right now. And then we also have the 30-minute bars, which coincide with the 30-minute sections of the TPO market profile, right? And so in order to make the most money, we need to be in harmony with all of these things, right? Because at this point, we can see that you can have a daily downtrend, you can have an as far as like the long-term trend, right? And then you can have daily momentum going in reverse of that, and then you can have 30-minute momentum going in reverse of that, right? So these up, down, cross moves that are happening all the time are super, super critical in order for us to keep everything that's happening in context with the overall larger move at hand, because that's where the larger moves, that's where the larger profit's going to be, right? Is within the, depending on your time frame, right? If you're on a longer time frame, the larger moves are going to be with the downside. And then within the shorter time frame, it's going to be wherever that daily momentum happens to be, right? So with this, let's just break open this real quick. Let's break open each one of these. Okay. And we can see clearly that the daily uptrend, or the daily trend, is currently higher as we see value moving higher on the day, right? We can see the close of each day is moving higher, etc. And so we see that where the opportunity lies is going to be in the up moves, right? That is where the opportunity is on the daily time frame. But the tricky thing is getting positioned for those moves in a meaningful way, that we're not just getting stopped out every time that we try to get in the market, and then ultimately see the move happen for us, right? So a sign that you're trading too small a time frame, or that you are, like, what's more exciting than the 1 minute time frame, right? Something's happening every single second, right? That's significant. A new bar is plotted. It's moving much more erratic volatility. It makes you feel alive when you're trading if you're looking at the 1 minute time frame where you've got to trade on, right? But honestly, it's just not advantageous. And for somebody like me, it's a weakness of mine, because as much as I would like to be sitting there staring at that, thinking that I'm being productive, staring at a 1 minute chart when I'm trying to focus on what's happening on the day and an hour are so far removed from each other. You get lost from the forest in the trees. And so it ends up blurring and convoluting your bigger picture thinking that's supposed to be happening in the background as to why and what you are doing in order to take advantage of that largest profit for the day, right? And there's so many times we can have, like you see here, that the market came up, it tried to make another push higher. We kind of were, we were building some sort of support here, and then it reversed lower before it moved back higher and bit back lower again, right? So those things that happen, these are things that happen on a higher time frame, on a 30-minute time frame, much less than the gyrations that are happening on a 1 minute time frame, right? So all that to say, this is coming. It's just kind of like, as I can see it, I'm looking back at some of my old trades and some the times whenever I was struggling, it just seemed to be the key thing was that I just wasn't able to fully focus on exactly what was happening in the moment in regards to the larger time frames. And so as we talk about trade management, so let's go ahead and break these down because I wanted to talk about this one here. So we've got two scenarios here. Essentially, we've got where this was a new low that was made, tested a previous support level before breaking out higher. So this is a reversal back through the previous day, which can create some pretty strong and sustained moves and are harder to trade as compared to this one here, where the market obviously is rolling over and is just continuing to the downside. So I thought those are two good scenarios to roll through. So let's go ahead and look into that. All right, so we're going to jump back over here to the 5th. We're going to do that one first. Okay. So what we see here is essentially I've overlaid the previous days. So this was a Friday, I believe. So I've overlaid the Thursday's TPO support levels, support resistance levels. So the value area low, value area high. This is the previous day VWAP close, and this is that Thursday's point of control. So that being said, we can see that price was trending lower for the first part of the morning, right? And then, so which is all great, right? At that point, the daily momentum is to the downside, and so the trade is to the downside. Until we get down here, where essentially price bottoms out and then starts to reverse, right? So if we're looking at this from coming into the day, and we see that the daily trend is down, it's below the value area low and the point of control and all that, we're going to be looking for shorts, right? Is ideally that's where it makes the most sense to try to get positioned for, wait for a pullback back into value and get positioned for that move lower, right? But we need to be aware and paying attention to what's happening, and so that we don't, on days like this where if we're paying attention to the signs, to where you can see here that the market's almost effortlessly moving higher as compared to lower, right? We can see that it starts to struggle in the beginning here. We get a really nice strong pullback, you know, a couple hundred points, right? This is from 360 to 560, right? We get this really strong pullback, this move to the upside where it tests the previous day VWAP, and then it comes down, and you can just see it's just kind of like this nice glide, right? So then at this point, we would want to see some sort of continuation price action that's showing that the price wants to continue lower as it struggles here at the 1 standard deviation band, or at the value area low, or even all the way up to being rejected again from the same level. But at this point, the market just is effortlessly moving to the upside, right? And you can see as this turns into a trend day and just continues to keep going and going and going. So in order for us to be able to, we have to have an open mind. We have to be looking at things objectively, not holding on to any one belief too strongly because we think that it should go down because the daily trend is down doesn't mean that it's going to go down or that it has to go down, right? And so applying those beliefs on it is going to essentially cause us to fight the trend that should be starting to become apparent, right? And allowing us to, if we took some losses, if we were strategic about our entries, we're going to already have taken some profit and our losses are going to be small. And then B, we're going to realize that, hey, this is really showing signs that the market wants to go higher, right? I mean, it's showing, this is classic price action as far as what we want to see. We're seeing support at the +1 standard deviation band. We're seeing a nice smooth pullback to the VWAP before it rejects higher again, comes back, tests the +1 standard deviation band again before it just continues to move higher, and it's in value, this developing value, right, just continues to have this nice glide higher, and then it just takes again no major reactions in areas that we'd be looking for a nice reaction if we were shorting it. And it just glides right through these levels and then just busts them, right? So we have to, that's why having the right mindset and having an open mind and being objective is so critical to help us manage these trades correctly, even in regards to what's happening on the larger time frames, right, and how they interact with each other. So if we go back to the TPO chart, right, so we're looking at, and this is one of the things that I pay attention to, is that momentum on the 30-minute chart, right? You should almost be trading with that momentum, regardless of what's happening, because that is really what sets those 30-minute blocks of time. If you just trade with those are going to show you when the next bar closes lower than the previous one, it shows you that momentum has shifted, and oftentimes that momentum will carry. And the idea here is really just to make things simple. It's not to make things complicated or confusing, right? And so we can see as price broke lower here and price, so this is so let's pop this up so we can look at exactly the times here. As momentum shifted higher, it actually potentially shifted higher at the 9:30 time frame. This could have been an up move and then a down move. So let's look at the 9:30. So that would be 9:30 to 10 and the 10 to 10:30 time frame when price really, when the momentum reversed. Okay, so let's go back over here. All right, and so you can see the 9:30. So that's exactly what happened. Price came down, made a new high here above this. So this is the 30-minute time frame. So between 9:30 and 10 o'clock, the momentum shifted to the upside, right, in a significant way with this move here. Okay, and then price consolidated within that 30-minute time frame before moving higher again. So these are some of our first cues to go, okay, we should not be short. We are in pullback mode and we should not be shorting yet. The momentum is to the upside. So that's step one in managing the trade. It's already far down below value. There's nothing wrong with even waiting for a pullback here if we think that price is going to have a reversion to the mean trade at this point to try to capture some of this momentum to the upside if there's enough room, right? And as we discussed, if the daily range is 400 and we're only at 150 points, then there is room potentially for that. Now, it doesn't mean that it can't come up to the value area low and reverse, and that may be a good place to take a first profit, right? But either way, again, we want to be paying attention and tracking that momentum and what's happening in the bigger time frame while we're executing on our smaller time frame, right? On our trading time frame. And so that's what we see here. Again, we see price pull back to this level here, and then it pulls back within the previous time frame. So let's take another look and see if momentum reversed to the downside, which it did. Okay, so that could be so right here, so that would be a sign. This would be an important area for us to watch, right? So momentum has reversed to the downside, but again, the context within what's happening here, like I said, even if you had decided that momentum is reversed at this point, and like we talked about, we shouldn't be necessarily at this point jumping on the long, right? Because there's nothing saying that this wouldn't continue to work itself lower, but we should be waiting for, again, another pullback, the 1SD, the value area low, to start targeting that short, and then just paying attention to what happens with the price action. Price action just says, nah, I don't want to go lower. And so we have to say, well, okay, well, let's go higher, right? It is as simple as that, right? And I realize that it's much more simple and less complicated when there is not money on the line and we're just looking at things after the fact. But that is our goal. Our goal is to trade as if there were no money on the line, right? And like we talked about having too much money on the line. If you are trading, if you are biting your nails and you are freaking out, and when price is moving against you and all these different things, you have probably got too much money on the line and you need to trade smaller. right? Even if you're just trading smaller temporarily to work on your emotions as you go through the trades and go through the struggles and the struggling points where price is moving against you and all that, as you're, doing breathing exercises and just learning to just be in the trade. We have to learn to cope with the price action that's happening. And oftentimes, those boil down to two things. The one thing, like I mentioned, is going to be trading too big. And the other one is oftentimes it can be a disadvantageous trade location, right? Where the trade location just doesn't make sense, right? Shorting, when you have the opportunity to enter in here, a short here, and you are now shorting this area here, you are setting yourself up to be taking heat on the trade, and probably more than you need to, because you traded, you were too impatient to wait for it, hoping that things were going to break down, right? If you're shorting things from here and saying, well, I'm going to wait to see what happens if this area is broken here, I'm going to go ahead and take some of it off, or I'm going to take the whole trade off, or I want to see if how price action works, which is usually the best thing to do, is to give yourself enough room for the market to breathe and to show you exactly what it wants to do before you exit, which is kind of like what happened in this area here. And it may be this combination of price action here to go, okay, let's just see what happens at this point and let's get out. But if you're waiting to have, and you're being patient and saying, well, I'm not worried about this downside yet, I'm worrying about my risk reward and worrying about strategic entry placement, you're going to take much less heat, and it's going to be a less stressful ordeal overall. So those are two things that are critical to help us be able to be objective within the trade itself, right? So, and again, if you're able to do that, the sooner you're able to understand and see what's happening and then reverse your position if you have to on a day like today, is ultimately going to end up more in your favor, right? And you could have traded this small, saying, all right, well, the trade's still down, I don't believe in it, but I'm going to throw on one contract and we're just going to see what happens, right? And so on a day like this, you'd have been very happy that you did so. All right, so that is going to be that's our reversal type trade and managing through that. So let's switch back over to let's see which time frame we went up. That's right, we were using the 5-minute time frame. So I think it was the 11th. Okay, here. All right. So let's look back at the chart here, and you can see really quickly that on that day, right, the 30-minute time frame never reversed. So if you're just watching that 30-minute shift as far as momentum to the downside as like a heads up and a warning, there was never anything that was a red flag over here as far as any of the pullbacks that happened. All right, so this guy, we can see that the daily momentum is shifting, right? We're having our closes are higher and higher until here our value area is created lower than this one here, and so momentum is waning, right? And you can also see too that if there was a trend line drawn through here, that things are starting to break around this area here. And then significantly, when this move happens here, this is kind of like hey, the market is giving us this huge heads up where it has that momentum push and it goes, this is where I want to go. Follow with me. We're not going to go straight down, but guess what? We are probably going to continue lower. So let's see how we can manage that. Okay. All right. So again, we have the 30 minutes. So obviously there was a very large move that happened within a 30-minute time frame. A poor low is made, and then we have this move higher here. So let's take a look at that. All right. So we can see the waterfall happen. We can see the previous day's value area low, value area high, and the point of control. And so price does this large move lower, which again, we've talked about before with the momentum entries. This is very hard to trade. It's not that you can't, but you just need to understand that the risk you don't want to be holding through the swing back to the upside, right? If you're going to take advantage of this, take advantage of the movement lower and be willing to cut that sucker short quickly unless you are willing to hold, like if you get an entry here for one contract and you say, well, you know what, I'm going to keep my stop up here because I want to see how the day works out and see if it runs in a significant way lower, then again, that's something that can work. But trying to establish a full position here with a full stop above here when we're probably halfway through the daily range because of the size of this move is not going to be your best option. The risk reward is just too skewed. You don't want a 1-to-1 risk reward, right? Now, if you're playing that momentum to the downside and you're just going, okay, sell, sell, sell to try to rack up a big profit, but then you are on the ball when it comes to when price starts moving against you, that you're buying it back up and you're taking those profits quick, trying to take advantage of the move to the downside, then that's a completely different story, right? And you're trading the momentum at that point, and that can work. What's not going to work is trying to establish your long-term positions all through this area and then assume that the market's going to continue to move in your favor, right? All right, so we know based on the TPO chart, we in the 30-minute time frame, which essentially is the 9:30 to the 10, we can see that definitely moved lower. And then we have price move, let's see, from the 10 to 10:30, price is moving higher here, and then we can see that at the 10:30 that momentum has definitely shifted back to the upside. So we go, okay, but we knew that, that this is happening in real time, right? We're referencing the TPO chart and the 30-minute time frame again, just to give us an anchor. Okay, the trend is down, but the 30-minute momentum is up. So okay, so now that being said, what are we looking for, right? We know that the daily momentum is down. So what are we looking for? We're looking for those levels. Now that we've had a strong move to the downside, let's look for the strong move, where the strong move to the upside might end, to where we're going to get on board with the trade and hopefully take advantage of the next larger move lower, right? Because that's where the money is going to be made. Especially with us being so far down below the previous value area, right? At this point, we're not worried about price trading back up through the previous day's value area like we did on the last day, right? At this point, the market's just low. It dropped a lot. It's probably going to have a significant pullback. How can we strategically enter and then manage that and manage the day and manage those trades that happen? Okay, so as we watch this, we've watched the price action come back up, and now it's chopping through the developing VWAP, and this turns into a nice long consolidation here, right? So we can see here that we were able to draw a trend line here, a counter trend line to the main trend, and price broke through that. Like I said, it can price can do a few things whenever it goes through the trend line, right? Which is pretty much all price can do. It can either go up, down, or sideways, but at least it's a specific area that we're watching to see that can trigger us into some sort of action, right? But this time, nothing really happens. We head into a consolidation. Okay, cool. Consolidation. So consolidation means that we have people who are taking profit from this last larger move down, and also people who are trying to get established, figuring out what they want to do, right? They're in the same boat that we are. They're watching this going, okay, what should we do next? And so as price just oscillates here, and the longer this happens, the longer and the tighter the consolidation, usually the bigger the move or the explosion that happens at the end, right? So ideally, we're looking at this, the daily momentum is down. This is a 5-minute chart, so the price action is essentially not doing anything, right? And so I said this is a 5-minute chart, but this could be any chart, right? If you're swing trading this and you're trading this on the hour, this could be an hourly chart, right? And this could be a weekly, this could be your weekly VWAP, right? So, but either way, the consolidation, wherever the consolidation breaks out, we've got to let that lead our decision making, right? So ideally, we would like for the market to break down and continue to the downside and head down another 200 points. That'd be excellent, right? We could figure out a way to get position if it broke down and came back up into this area here and we shorted it, and then we end up with this stellar profit on the day. But oftentimes we don't always get what we want, right? So we need to keep our mind clear and open and have a plan for either side, right? So ideally, because of where this is at, as this breaks out to the upside, where are we targeting, right? Well, the +1 standard deviation band is a little too close to try to short that because, you know, the resistance isn't going to be strong enough to counteract a large move that is going to that's potentially building up here. But we do have the value area low from the previous day, right? And we say, okay, well, that's probably an ideal place, especially to at least nibble, if not take a full size position, because at this point we have this move here and then this move here. This is a significant pullback within the relative size of this drop anyways. And so if this move really, if momentum is really shifting to the downside, the upside momentum is only going to be able to gain so much. So what this has done essentially is this move here has flushed out the remaining people who were short, or at least the weak hands through this process, that were really, really hoping for a move to the downside that didn't happen, holding on to hope. And so what we get here is we get another nice accelerated trend line to the upside. So we have, okay, we're targeting our entry here. We still think the market's going lower. So what do we do after the market moves higher in a way that's unsustainable? We can see that the bars here are getting smaller. So the excitement to the upside is starting to wane. There's nothing wrong with waiting for some sort of trigger, such as a counter trend line break, to get your position established or to start entering and layering into your trade, right? But we already know that based on where we're at in this area here, that there can be a decent risk reward in our trade because we've moved higher back up into the day's range. And if the market is going to make a new low at that point, which is not guaranteed, but it's possible, that's going to be, our risk reward is skewed in an excellent way there. And so what we end up with is essentially an entry trigger here. Price doesn't quite make it up to the value area low, which I will also say right now, like trying to put your entry at these specific levels is essentially a fool's errand, right? Never is this price move specifically and perfectly from one level to the next, right? So ideally we want to have our entry at least a few points below this area, just to make sure that we don't, because how much would that suck, right? To have our entry at this area, it does not touch it. Price moves from here all the way down to new lows on the day, and we missed it because we decided that we wanted to be too slick with our entry, right? So put some flexibility in your entries. These couple of points up here do not matter in the large scheme of things if you are being strategic about how you are entering in the trade, right? So that's what we see here. We see that this trend line is broken, which ends up being a good entry trigger. We come back down to test the developing VWAP, and we get a tiny bounce here before price continues to move lower, and then we kind of get this little trickle here, and at this point it's the end of the day and the trade's over, right? And so yeah, so this is and I'm trying to show good examples here where, again, I mean, so many people, I've seen so many, kind of, I wouldn't necessarily say scammers, but I think that they are. When you're just showing the prettiest examples and the prettiest pictures and go, oh, this is just so easy, right? We all know, if you've been trading for a little while, you know this is not easy. Trading is simple, the process is simple, the execution and the planning and the consistency, all that is not easy, right? Simple, but not easy. And so trying to use examples and things that for sure that I've struggled with in the past, and where I know when you're in the heat of the moment, and the bar, the hard right edge of the chart is right here, and you don't know what to do next, but we have our context, we have the things that have happened, to the left of the chart, and we have, our momentum and these other things that we can track that can help us make good decisions at the time, right? So I just want to, I hope that you got some value out of this. I hope this kind of really put the idea of how we should be thinking about our trades, managing the trades and all that, put that into a good perspective. Again, you can go over 100 examples to help drill it in. And, but, I don't know whether you need to watch this video over again and again to kind of help solidify exactly what that kind of looks like. But back in the group, we'll be doing more examples of this, and we'll be doing more trading on this as well, because this is really, really critical. This is how we make money. This is managing our trades well, and how we're entering and how we're exiting. All right, that being said, it's time to get into the next section. So we'll see you over there.